Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco, and my partner, Hari.
Hello.
Great t-shirt there, Hari.
Yeah, it's pretty awesome.
Valueinvestor.org. Great logo, don't you think?
I do. I like it.
Awesome. In this episode, we're going to be talking about share cannibalism. It's a continuation of our discussion from the previous episode, where we talked about the fundamentals of share cannibalism, why it's important, and share buybacks, so the fundamentals of share buybacks. We talked about that in the previous episode. In this episode, we're going to continue our discussion on share cannibalism, where to look for it, when you find it, what to look for, things along those lines. So before we start, give us a quick disclaimer, Hari.
Yeah, Value Investor TV podcast is a podcast that helps you understand, educate yourself, and entertain yourself on concepts behind value investing. We are not a financial advisor. We don't know your specific financial situation. So if you make any financial decisions, contact a reputable financial advisor before doing so.
Awesome. Okay, let's dive right in. So, Hari, for listeners who didn't listen to our previous episode, at high level, what is share cannibal?
Yeah, so share cannibals are companies that have a heavy emphasis on reducing their share count over a period of time. Let's say 3 years or 5 years. They spend a good amount of their free cash flow reducing their share count, and by doing so, they actually increase the earnings per share for their shareholders. So we are looking for companies that are basically driving value for their shareholders through capital allocation strategies.
Awesome. So let's say share cannibal is very interesting. Let's say we want to look for them. Where could we go to find share cannibals? What sort of tools or kind of metrics do you look for?
Yeah, so one of the things that we've struggled with as investors for so long, we've had a lot of experience looking, and share cannibals are a little bit harder to search for, right? There are all these screening tools on the web, and some of them are good, some of them are a little bit harder to find. And so, one of the things that we had talked about earlier is that Becco and I are building a website to help you find companies. It's a database. It's certainly not the final place you should look. It's a starting point to look for companies, and then use that to go start your research efforts on finding businesses. So we have done this to help ourselves. We've also feel like it's a community effort that we want to help you guys. So in the next few months, we'll be launching the website to help you guys look for these things. So in the future, we will, and we'll of course announce this when it's available, we'll provide a list of both the Magic Formula companies. We'll also provide a list of companies that are heavy cannibals. I want to mention to you guys, some of the Wall Street firms that, buy data, they spend hundreds of thousands of dollars, to do this. So, we are going to, we're giving you this stuff to help you find these companies and kickstart your own value investing career. In the idea that you would, look for this, but you still have to do your own research, and we want to make sure that you don't just indiscriminately buy stuff off of a list like this. Because, I think it's a terrible thing that, if you listen to us and then don't do your own work and go out there. That is the last thing I want anyone to do. If you're going to do it, if you're going to go and invest, and not do the work, then I would say, buy an index fund or something else. But really, this is about doing your own work. So we want to help you because I think it can be daunting to look, for companies. Mm-hmm. And so to that end, we'll help you with that list. But let's say you do get that list, and I think the list that I put together this last week, I think had 140 companies on it. Well, that's a lot of companies to screen for, right? So what do you want to look for in that list once you do have it? And when, we're hoping by the end of summer it'll be available, to our listeners to look for. I think the first thing that you want to look at is the checklist, right? You want to actually look at this company just like any other company you would look at. And, we put that checklist together. And by the way, you can email us info@valueinvestor.org or
Twitter. So info@valueinvestor.org. You can email us for the checklist. Or also you could tweet us at Value Investor TV, at Value Investor TV. That's our handle for our checklist.
Yeah. So if you do have that checklist in front of you, what we're really looking for is we're trying to prevent companies like in the last episode we talked about GNC, right? You would have looked at them and said, wow, they're really buying back a bunch of shares, but they were way overpaying for it. So the checklist is kind of making sure that you understand, is there a moat for this company? What is the moat? How strong is the moat? Is it going to be protected in the event of, the next few years, the next 5 years? And then really it gets down to the questions around financials and, how are they managing their capital once they've generated it? What are they doing with it afterwards, right? And that's really where this gets into, the checklist will help, identify those companies. So there's a few other things that we want to see is that if the company is expensive when they're buying back shares, then the share buyback has very little impact, right, on the price of on the earnings per share, right? So we want to actually look at companies that are doing it when they are cheap, right? So we'd mentioned that on last episode, but we'd also covered two companies that are good, strong share cannibals, Southwest and NVR.
Yeah. If you haven't listened to those episodes, please do check them out. We cover kind of share cannibalism in those companies as well.
Right. And one of the things that was interesting about both of them was their revenue growth was, not huge. It was like 8 or 10%, but their earnings per share growth was like close to 30%. And that was all due to the cannibal effect. In Southwest case, they had some benefit from, the reduction in competition and things like that, and cheap gas. But for the most part, it had a lot to do with their cannibalism. So, we want you to look at those kind of things, and will this buyback actually have a real impact on the share price?
Yeah.
Right?
And also, I think the size of the buyback also matters in a lot of the cases. A lot of companies will do a small buyback here and there, but you're really looking for companies that it might be small, but you might be looking for companies that are doing maybe small to medium-sized buybacks for a long time, or just doing a huge commitment on the buyback. Right. So in the billions, they're buying back a whole bunch of shares in the billions of dollars worth of stuff. So you're looking for those.
Yeah, and I'll give you another example of a company that is in this intermediate state. So Tractor Supply is a fantastic business. If you haven't ever looked them up, they are a great company to look at, and they operate in a kind of a strange sphere because they're rural for the most part. They don't have a lot of competition, and they are growing very well. But they also do a large percentage of their free cash flow goes to dividends and buybacks. Now, the problem with their buybacks are indiscriminate, right? So they do a significant buyback all the time. They just every day their broker basically buys back shares. Maybe not every day, but frequently. And the problem with that mentality is that it reduces the share count. But when they took a big hit 2 years ago and they dropped to $50 a share from like 90, if they had just saved up all of the money that they had for the last 5 or 6 years for buybacks and just did it one time then, they would have done so much better with their buyback because at that time they were super cheap. So, it really gets back to how you it's not just the fact that they're doing a buyback, but they may authorize the buyback, but they actually put parameters around when they will do it. Is where it really the rubber hits the road.
Yeah. One thing that really is interesting to me is we talked about this book many times, but particularly in the last episode, this Outsider book. One of the things that the book really hammers on is the shareholder value, maximizing shareholder value, and one of the key ideas that the book really describes in detail is good CEOs are good investors.
Yeah.
So I'm going to say that one more time. Good CEOs are good investors, and the reason why that is the case is a buyback is a great example. When you know the valuation of your own company and you are an investor of that company, you know when to buy the shares because you will know, oh, the price is, let's say, below 50, and below 50 is a good value, and you can buy a whole bunch of shares then.
Right.
It's the same mentality as investor, compared to a CEO in this situation. So I think that was a pretty pointed point of view from the author.
Yeah, and I think it's an important concept to remember when you're looking at these companies is if you're at an NVR or Southwest, you're probably okay buying back all the time because the share price never really gets too crazy relative to their valuation. But if you're buying back when, like in GNC's case, when it's really expensive, there's no benefit. Mm-hmm. And it's actually destroying shareholder value. And in this case, destroying the company itself. Mm-hmm. And when you look at it from the perspective of Tractor Supply, they're a great business, and they allocate capital somewhat well. But if they had done it more judiciously, it would have had a much bigger impact, mm-hmm. right? And they're a great business; they grow at a very high rate of return. And mm-hmm. I bought Tractor Supply at $50 a share for my dad's portfolio, and it went up to $110 a share. Somewhere around 90, I sold it. There's a great rate of return, but if they had done their allocation better, I would have held on to that stock forever, mm-hmm. right? Because it's literally a forever company. One of the best run businesses I've seen. But that capital allocation decision making made me pause, because I don't want them to just, when they're at $110 a share, they're, trading at a PE of like 30. That's not a good use of my money to spend, mm-hmm. On that. So, so that's how we want to think about these mm-hmm. problems, because it gets back to the opportunity cost of every decision making.
Yeah,
right?
Absolutely. Okay. Anything else you want to add in this episode, Hari, before we close out our discussion around Share Cannibals?
So no, I think I'm really excited to get this website out and for everyone to see, because I think it'll help you start looking for companies that are interesting, and if you're struggling with you've seen all of these concepts, and we get a lot of emails from people who are present to us companies and things like that they'd like us to review, and we love hearing from you guys, and we love talking about the companies that you suggest. I think this is one of those lists, just like spin-offs and just like the Magic Formula. It's a great list for high value, high return targets, right?
For sure.
And so that's the kind of thing that we want to put on the website is, mm-hmm. Companies that are going to be interesting targets for mm-hmm. you guys to look at. And that's why I'm excited about these, because, look, if Buffett says it's a good idea, then it's pretty sure it's a good idea. So
yeah, exactly.
And that's why we want to learn what he has learned for the last 60 years.
Yeah, so. Absolutely. And as we develop this website, I think it'd be really beneficial to get initial feedback. So if you guys are interested in sort of beta testing our website, our product, please feel free to reach out to us at info@valueinvestor.org with that intention, and we'll collecting our beta testers. So please do reach out to us for that. And also, what would be really helpful, like I mentioned in the last episode, is we're really trying to get ourselves out there. And we've been hearing a lot from you guys about how our podcast has been helpful, and that's been really encouraging. It's one of the things that I'd say one of the few things that is really keeping us going with this episode, with these podcasts. So keep them coming. But also, what would be really helpful is on Apple Podcast, give us 5-star rating. I think that would be really helpful us to get ourselves out there. I want everybody to take control of their financial health and to own their financial future. and I hope our podcast could be some help in that journey. So please do that for us. I think that would be really helpful.
And tell your friends too.
Oh yeah,
all your friends,
and
everybody you've ever met, everybody on Facebook. That would also help too.
Awesome. All right, thank you guys for joining us. We'll see you on the next episode.
Thanks.